While most of the world has been glued to Bitcoin's price swings and Ethereum's updates, XRP just secured something that could trigger its very own Bitcoin moment.
Bitcoin has been, I think will continue to be, solving a use case, that utility question around store of value. In the case of XRP as a payments tool, particularly the way Ripple uses it for cross-border payments, you're talking about trillions and trillions of dollars that are flowing across border.
After a 4-year legal battle, XRP, the digital currency created by Ripple, finally has clear rules from US regulators, and this has the potential to change everything. So, in today's video, we'll break down how Ripple's SEC battle reshaped XRP's legal status, why new US rules now let banks hold crypto, and how Wall Street's growing interest could unlock institutional demand at a scale XRP has never seen before. Okay, let's rewind to 2020. That's when the SEC, America's financial watchdog, sued Ripple. The fight dragged on for years and it left XRP in legal limbo. Fast forward to March 2025, Ripple and the SEC finally settled. Ripple paid a fine that ended up being $50 million, and by late summer, both sides dropped their appeals.
So this provides a lot of certainty for Ripple, for frankly me personally, because the SEC had sued me. The SEC has abandoned their appeal.
There was also another breakthrough in January 2025. The SEC got rid of a rule called Staff Accounting Bulletin 121, or SAB 121 for short. This rule was a nightmare for banks. Think of it this way. Imagine your neighbor asks you to store their lawnmower in your garage. You don't own it, right? But SAB 121 forced you to write it down as if you owned the lawnmower and owned your neighbor a lawnmower-sized debt. It made your financial books look terrible, even though the lawnmower was never really yours. That's exactly what SAB 121 did to banks holding customers' crypto. It made their balance sheets look worse for no good reason. Now that rule is gone, banks can offer crypto storage services without messing up their accounting. Put it all together, and XRP now has two things it never had before: legal clarity and a real path into traditional banking. So why are traditional banks suddenly interested in XRP? Well, here's the problem they're trying to solve. Let's say Santander Bank in Spain needs to send money to a bank in Japan. Right now, that takes up to 5 days and costs between $25 and $50 in fees. The money bounces through multiple middlemen before it finally arrives. With XRP, that same transfer happens in about 3 seconds and costs a fraction of a cent. Business leader Jake Claver compared it to the shift from letters to email. In the early days, you could only email people on the same platform, Yahoo to Yahoo, AOL to AOL. Now, you can email anyone, anywhere, instantly and free. That's what XRP is solving for money. Sending cash locally through your banking app is easy and cheap, but sending it abroad, slow and expensive. XRP wants to make cross-border payments as seamless as sending money to your neighbor. And this is starting to take place right now. SBI Remit in Japan already uses XRP to send money to the Philippines, Vietnam, and Indonesia. Santander and other banks also use Ripple software to move money faster, though currently they don't always use the XRP token itself, but this could change in the near future. The SEC has also approved a rule that allows spot ETFs, exchange-traded funds. These are basically investment funds that regular people can buy for cryptocurrencies beyond just Bitcoin and Ethereum. Bloomberg analysts now think there's a strong chance XRP could be next in line. An ETF would let big institutions buy into XRP through a regulated product, similar to what happened with Bitcoin's institutional moment in 2024 when ETFs flooded in their billions.
But it isn't just crypto enthusiasts, right? Because for Bitcoin ETFs, you're tapping a market that's more geared towards traditional equity type or bond type investors.
As of early November 2025, XRP is trading at about $2.40, but the price isn't the real story here. It's who's getting involved. In May 2025, the CME Group, one of the world's biggest financial exchanges, launched XRP futures. That's a way for hedge funds and big institutions to invest in or bet on XRP's price through a regulated platform. By early autumn, the total value locked into these contracts passed $1 billion. That's a signal that serious money is now starting to pay attention. And here's what separates XRP from a lot of other cryptocurrencies. It already has a clear job. Every time a payment company uses XRP through Ripple's on-demand liquidity system, which is basically instant settlement for cross-border payments, it represents actual use and real demand. That's a crucial difference. Bitcoin works like digital gold, a store of value. Ethereum powers decentralized apps and smart contracts. XRP moves money. That is its purpose. So where does all of this lead us heading into 2026? XRP isn't the first cryptocurrency to get regulatory clarity, but it's the first payment-focused one to come out of a major lawsuit with a clear green light from US regulators. If an ETF approval follows, it could unlock institutional demand at a scale XRP has never experienced before.
The United States SEC was dragged kicking and screaming to approve the Bitcoin ETF in January. To me, it's just inevitable. You're going to see not just Bitcoin and ETH, you're going to see an XRP ETF.
It's likely Bitcoin will keep its place as the world's digital store of value, and Ethereum will continue driving innovation in Web3 and decentralized finance. But XRP is positioning itself as the bridge, the connector between the old financial system and the new one. After years stuck in legal uncertainty, XRP isn't the question mark of crypto anymore. It's the one to watch as it looks to secure its very own Bitcoin moment. Thanks for watching Bizotium. If you enjoyed this video, please consider subscribing with notifications on, and we'll see you on the next one.